5 minutes before the closing bell rings, can we close higher by 300 points on the Dow? We're there right now, a near 2% gain. Let me bring in right now Peter Cecchini over at Cantor Fitzgerald. He's the chief market strategist and head of institutional equity derivatives. So you've got a lot of hats to wear, but
yes.
Let me put on your speak to our viewers hat.
Yes.
People are nervous. They don't believe what they're seeing on the screen. Mm-hmm. Should they? And if not, when shall we expect a bottom at this point?
Well, right now, I think it's important to differentiate between the sort of longer-term outlook, which unfortunately for us is not particularly positive, versus the sort of shorter-term moves in the market and the volatility we're experiencing now. I actually think this is a nice place to dip your toe, to enter the market, to buy defensive names, for a rally that I think investors need to sort of change their mindset, the way they think about the markets right now. Be a little bit more tactical, a little bit less long-term oriented, if you will, a little more willing to sell the rallies than they normally might be.
Okay, a little more willing to sell the rallies. That makes people more trader-esque versus long-term, because other folks, you may see a complete opposite day on Tuesday after the long holiday weekend. So when you say tactical, where would you go in and say, okay, I'm aiming at that, I'm aiming at that, I'm going to bring in some of these names?
Yeah, again, I think the staples, I can't speak to individual names, but the XLP, for example, is an ETF that contains a lot of the sorts of names that I would be thinking about. Those things that people need to buy, you know, whether things are good or things are bad.
Well, the Procter & Gamble's of the world, and you know, the J&J's, where you have to get in there and use some of these products.
That's right.
Who doesn't need Tylenol or Band-Aids in their house, even in a bad economy, right? Yeah,
and historically, they're a lot less volatile relative to the broader market in tough times.
You have great hair. You haven't been tearing it out? I mean, this has been a tough market to deal with.
It's been getting grayer. Let's put it that way.
Yeah, but it's not thin, I can tell you that. As you look at all that's happening, does anything make you nervous? What do you worry about at night?
Yes, the credit markets are what really keyed me into what I thought was going to be a flat to somewhat difficult 15, and really why I'm not all that constructive on 2016. And in fact, going back to 2014, the credit markets were good. And so we were very bullish in 14. So I like to look at what's going on in high yield credit. How wide are spreads? Are they widening? Are they tightening? As of late, liquidity in the market for high yield bonds, for example, has not been terrific.
Well, look at crude right here, still holding on to aftermarket gains of 10%. We were up about 12% earlier. I need to point out to our viewers, we're very close to session highs right now. Dow Jones Industrial's up 307 points. Gold reversing today. Are you a gold guy at all?
I try to be, but I don't do it that well.
Why not?
Well, you know, gold is tough because gold, as I like to say, wears many hats. So you have to figure out what instrument, what role it's playing at any particular time. So sometimes people buy it because they're afraid. And I actually think the recent rally in gold was because people were afraid. They bought treasuries, they bought gold. At other times, they're selling it as a source of liquidity, which is one of the reasons why it sold off so aggressively over the past 2 years, in my view.
It's great to see you, Peter. Thank you very much.
Thank you, Liz.
Have a lovely holiday week.